Warren Buffett just sent the most important signal in investing right now, and almost nobody is paying attention to it. While Iran is attacking the UAE, while Project Freedom is turning the Strait of Hormuz into an active war zone, while oil is spiking to $114 and markets are sliding, Warren Buffett is sitting on $373 billion in cash and saying absolutely nothing. That silence is the loudest signal in the entire market right now. Because here is what most investors do not understand about Buffett. He does not react to crises. He prepares for them years in advance. And today, while day traders are chasing oil headlines and panicking about their portfolios, the stocks Buffett already owns are quietly doing exactly what he designed them to do. I went through every Berkshire filing, every recent interview, every public statement from Buffett and new CEO Greg Abel to build this list. And by the end of this video, you are going to understand not just which stocks Buffett would buy during the Iran crisis, but why he already owns them and what that tells you about where the real opportunity is right now. If you want to think like the greatest investor in history during one of the most dangerous moments in recent markets, hit that subscribe button right now. This is exactly the research that matters today. Here is what we are covering. 5 stocks that Warren Buffett's wartime investing philosophy points directly to right now. One of them he bought at the absolute bottom of the oil market just weeks before the Iran war started. One is a company he has held for 38 years through every war, every recession, and every crisis in modern history. And one is a business that generates $265 million in additional cash flow for every single dollar that oil prices rise. I am saving the most important one for last. Let's get into it. Stock number 1, Occidental Petroleum. Ticker OXY. Here is the story most investors missed entirely. The $9.7 billion deal for Occidental Petroleum's industrial chemicals business closed on January 2, 2026, when oil prices were near multi-year lows. WTI crude had hit a 12-month low around $55 just weeks earlier. Buffett's team locked in a high-quality industrial asset at a depressed valuation. Classic Oracle of Omaha timing. Think about what that means. While everyone else was worried about low oil prices, Buffett was writing a $9.7 billion check to buy more exposure to the energy sector. 6 weeks later, the Iran war started. The Strait of Hormuz closed, and oil went from $55 to over $105. Occidental said its cash flow increases by $265 million for every $1 per barrel increase in oil prices. Oil went up $50 per barrel from Buffett's purchase price. Do that math. That is $13 billion in additional annual cash flow from a single price move. And Buffett saw it coming when nobody else did. Berkshire Hathaway now holds approximately 29% of Occidental Petroleum. While day traders chase headlines and oil swings wildly, Buffett's expanding energy position looks increasingly well-timed amid the Strait of Hormuz tension. Here is my concern. Occidental is now significantly higher than when Buffett bought it. The easy money may already be made. And if a peace deal is reached quickly, oil pulls back and Occidental pulls back with it. My takeaway. Buffett bought Occidental when oil was at $55 and everyone was bearish on energy. Oil is now at $105. The man was right again. This is still a buy for investors who believe the Iran crisis is far from resolved. Now let me show you the stock that tells you the most about how Buffett thinks during wars and crises. Stock number 2, Chevron, ticker CVX. Chevron has raised its base annual dividend for 38 consecutive years. At its most recent investor day, the company forecast $10 to $20 billion in annual share buybacks through 2030. 38 consecutive years. Think about what happened during those 38 years. the Gulf War, the 9/11 attacks, the 2008 financial crisis, the COVID pandemic, multiple oil price crashes, multiple recessions, and through every single one of them, Chevron raised its dividend. That is not luck. That is the kind of durable business quality that Buffett has built his entire career around finding. And here is the detail that makes Chevron uniquely relevant right now. The CEO of Chevron just told CNBC that the Iran crisis is no longer just a price problem, it is a physical supply problem. He said the question is not how much oil costs, the question is whether fuel can physically reach its destination at all. When the CEO of one of the world's largest energy companies says that, and Buffett owns over 130 million shares of that company, you pay attention. Here is my concern. Chevron is not cheap in absolute terms, and if the Strait reopens faster than expected, oil prices pull back and Chevron loses some of its recent gains. My takeaway: 38 years of dividend growth, fortress balance sheet. The CEO just told you supply is the physical problem, and Buffett is already there with 130 million shares. This is a strong buy. Drop a comment right now. Do you think Project Freedom will successfully reopen the Strait of Hormuz? Because the answer to that question determines everything about Chevron's near-term performance. Let's keep going. Stock number 3, Coca-Cola, ticker KO. I know what you are thinking. Coca-Cola? During an oil crisis? What does a soft drink company have to do with Iran and the Strait of Hormuz? Everything. And here is why. Buffett initiated a position in Coca-Cola in 1988. Importantly, his purchase followed the Black Monday crash when panic selling presented an opportunity. The legendary investor was greedy when others were fearful. Coca-Cola is now the longest-held position in Berkshire's portfolio, valued at around $31.5 billion. Hashtag investing. Buffett has held Coca-Cola through every crisis for 38 years. Not because Coca-Cola benefits from oil prices going up, but because Coca-Cola keeps selling beverages regardless of what oil prices do, regardless of what Iran does, regardless of what the stock market does. Buffett highlighted Coca-Cola in his 2023 letter to Berkshire shareholders, stating that when you find a truly wonderful business, stick with it. Hashtag investing. Here is the reframe that matters right now. During the Iran crisis, investors are rushing into oil stocks because oil is going up. But Buffett's longest-held position is not an oil stock. It is a consumer brand that sells the same product in 200 countries, regardless of geopolitical conditions. That is not a coincidence. That is Buffett telling you something important about how to build a portfolio that survives everything. If uncertainty leads to fear, and fear leads to a huge sell-off, look for Buffett and new Berkshire CEO Greg Abel to take action. Other investors should be prepared to do the same. Hashtag investing. Here is my concern. Coca-Cola is not a growth stock. In a rising rate environment with inflation pressures from higher oil prices, consumer staples face margin compression. This is a stability play, not an upside play. My takeaway: the stock Buffett has held longer than any other through every crisis in 38 years. If you are looking for a way to own quality that survives regardless of how the Iran situation resolves, Coca-Cola belongs in your portfolio. Stock number 4, Apple, ticker AAPL. Apple represents roughly 28% of Berkshire's equity portfolio, making it by far the largest single position Buffett left for Greg Abel to manage. 28% of a $317 billion portfolio in one stock. That is $89 billion in Apple. That is the most concentrated bet Buffett has ever made in his career. And he made it knowing full well that the world was becoming more geopolitically unstable. Here is the reframe. Most people look at Apple and see a phone company. Buffett looks at Apple and sees the most powerful consumer ecosystem ever built. 1 billion people carry Apple devices. Those people pay Apple every month for subscriptions, for services, for cloud storage, for music, for apps. That recurring revenue stream does not stop when oil prices go up. It does not stop when there is a war in the Middle East. It keeps compounding quarter after quarter after quarter. And here is the detail that most investors miss. Apple has $160 billion in cash and generates over $100 billion in free cash flow every year. In an environment where stagflation is a real risk and borrowing costs are rising, that cash fortress is worth more than almost any other competitive advantage. Here is my concern. Apple has significant exposure to China for both manufacturing and sales. Any escalation of the Iran crisis that pulls in China geopolitically could create supply chain complications. This is a real risk worth monitoring. My takeaway: the largest position Buffett ever held. 1 billion users paying monthly, 160 billion in cash, and a business model that keeps compounding regardless of what happens in the Strait of Hormuz. This is a buy on any meaningful weakness. Here is where the story gets most interesting, because the final stock on this list is not one most people would associate with Buffett at all, and yet it may be the clearest expression of his wartime investing philosophy. Stock number 5. Berkshire Hathaway itself, ticker BRK.B. Berkshire Hathaway's war chest approaches $400 billion. Buffett has not made a major acquisition since Allegheny Corporation in 2022, reflecting 4 consecutive years of market conditions he has not found compelling enough to act on. Outlier kit. Here is what that $400 billion means right now. In a recent CNBC interview, Buffett said his capital will be staying on the sidelines until markets fall further. He claims the wobbles we have seen so far in 2026 are nothing, and bigger and better opportunities are just over the horizon. My Wall Street. Buffett is sitting on $400 billion in cash and saying the current dip is nothing. He is waiting for genuine fear, for forced selling, for prices that reflect panic rather than recalibration. Buffett's long-held framework holds that geopolitical noise is temporary, while productive assets that generate energy, chemicals, and essential returns continue operating through cycles. The lesson today is the same one Buffett has delivered for generations. Own the productive assets, ignore the noise, and stay the course. Here is the reframe. When you buy Berkshire Hathaway today, you are not buying one stock. You are buying Apple, Chevron, Occidental, Coca-Cola, American Express, and dozens of world-class businesses. You are buying OxyChem, the chemical business Buffett purchased at the bottom of the oil market 6 weeks before the Iran war started. And you are buying $400 billion in dry powder that Buffett has said he is ready to deploy the moment markets give him the genuine fear he is waiting for. Berkshire Hathaway shares have remained remarkably steady through the turbulence, essentially flat year to date, while most of the market has been swinging violently in both directions. That steadiness during chaos is not an accident. It is the product of decades of deliberate portfolio construction by the greatest investor who ever lived. Here is my concern. Berkshire is a massive company. It will not double in a year. This is not a moonshot. This is a wealth preservation and steady compounding play. My takeaway: $400 billion in cash ready to deploy. The most diversified portfolio of world-class businesses ever assembled. Flat while the market swings. And a new CEO in Greg Abel who has promised to run the company exactly as Buffett would. For investors who want to own Buffett's entire wartime playbook in a single stock, Berkshire Hathaway is the answer. Let me bring this all together. Today, Iran attacked the UAE. Project Freedom is an active military operation. The Strait of Hormuz is a war zone. Oil is at $114, and most investors are panicking. Warren Buffett is doing none of that. He bought Occidental 6 weeks before the war started, when oil was at $55. He has held Chevron through multiple oil crises. He has held Coca-Cola for 38 years, through every war and recession in modern history. He put $89 billion in Apple, knowing the world was becoming more unstable. And he is sitting on $400 billion in cash, waiting for the moment when fear creates the kind of opportunity he has built his career on. Buffett's approach differentiates between share price and underlying value. If you can reasonably estimate the value of a company's business, market uncertainty will not be concerning to you. It could even be beneficial. #investing. If I had to rank all 5 for new money today, here is exactly how I see it. Number 1 is Occidental. Buffett bought it at $55 oil. It is now at $105 oil. The man timed this perfectly. Number 2 is Chevron. 38 years of dividend growth, and the CEO just said supply is the physical problem now. Number 3 is Berkshire Hathaway itself. $400 billion in cash and the entire Buffett portfolio in one stock. Number 4 is Coca-Cola. The ultimate crisis-proof business held through every war for 38 years. Number 5 is Apple. 1 billion users, $160 billion in cash, and the largest bet Buffett ever made. Here is the investing truth I want to leave you with today. Buffett said something in 2014 that is being recirculated heavily right now during the Iran crisis. He said that during major geopolitical events, the worst move an investor can make is to retreat to cash. The value of productive assets keeps compounding. The value of cash keeps declining. While everyone else is asking what to sell right now, Buffett is asking what to buy. And the 5 stocks I just showed you are his answer, built over decades, validated by every crisis he has navigated. You now know what Buffett owns and why he owns it. The question is, what you do with that knowledge. Disagree with any of these picks? Tell me in the comments. Which Buffett stock would you buy first right now? Which one do you think he is wrong about? Subscribe for weekly research on where the smart money is actually moving. No sponsors, no fluff, just the analysis. See you in the next one.